Welcome back to Alpha Recap. Markets closed for the day, and we've got a patchwork rally to unpack, where some sectors led hard and others lagged. As always, if you have questions, you can reach us at stockalpha.ai and use the Q&A feature. Let's dive in.
Thanks, good to be here. Today felt like a day of many micro stories, rather than one big macro driver. Deals, exploration results, and policy headlines moved pockets of the market, while credit and crypto cast a shadow over the broader rally.
So, kick us off. What was the executive summary you took away from the tape?
What really stands out here is that communications and media were the clear leaders, driven by concrete content numbers and deal chatter, while materials and energy got juice from exploration and renewables wins. At the same time, warnings about credit from major banks and asset managers, plus ongoing crypto headlines, kept a cap on a broad risk-on push.
Right.
When you step back and look at this, it was almost surgical. Investors piled into obvious winners and avoided areas that could be hurt by tighter funding or regulatory headlines.
Tell me about communications and media first. There were some big content numbers.
The number that really caught our eye was a big streaming release that drew about 14.2 million views on launch. That, plus studio deal activity like a first look arrangement, pushed the whole content stack higher and reminded people that good content still monetizes.
So that helps sentiment across payments and fintech adjacent names too, right?
Exactly, and Stripe PayPal chatter was the flashpoint. PayPal finished the day up about 7% on speculation. That lifted expectations for consolidation in payments, which ripples across merchant services and buy now, pay later names.
Interesting.
Honestly, I was a bit surprised by this one. Market participants are paying for the M&A optionality in a lot of these names.
All right, materials and energy. Headline wins there too.
Yeah, materials got a boost from exploration news. Appia reported a 300-meter rare earth intercept, and Alkane had another discovery at Tamingli, which put critical minerals back on investors' radars. Those stories matter because scarcity of certain inputs, rare earths, specialty metals, is a structural supply issue for EVs and renewables.
And energy?
Energy was a two-way play. Renewables milestones and utility-scale innovation on one hand, and traditional oil contract wins and LNG routing on the other. It was a reminder that yield-seeking allocators can own both transition projects and producers.
Right. And the other thing is...
Exactly. You can be in renewables for the multi-year story and still take tactical oil exposure. That's what we saw on the tape.
Let's pause for the downside. Crypto and credit were headwinds today.
Crypto had a rough mix of headlines. Security failures, some shutdowns in parts of the ecosystem, and headline-driven sell-offs. There were adoption items too, but the negative stories dominated flows, so the sector underperformed. On credit, Jamie Dimon's comment about elevated credit anxiety and repositioning from big managers like BlackRock, combined with active balance sheet moves, Citi selling more of Banamex, to tighten financing sentiment. That was a key reason banks, securitization-linked names, and REITs were watched closely.
Short reaction, not great for financials.
Nope.
Okay, we've talked about winners and losers. Time to get a little more thematic. What cross-sector themes did you see?
Three big through lines. First, AI and infrastructure are everywhere. A concrete example was CoreWeave pursuing about an $8.5 billion loan backed by about a $14.2 billion contract with a large tech customer. That tells you non-bank capital is willing to underwrite big AI revenue streams, and that flows right through to GPU suppliers, data center real estate, and even power providers.
Hold on. Say that again. CoreWeave?
Yes, CoreWeave's financing effort was a headline that showed how material AI contracts can be used as collateral in big lending packages. It's not just hype, it's affecting capital markets. Second, policy and regulation are active drivers, from promising cannabis vote outcomes in multiple states to the UK's tighter oversight of streamers and potential solar tariff rulings. Those moves can quickly reprice risk.
And the third?
Capital deployment is accelerating in energy transition and life sciences. Big utility Capex, record storage builds, plus AbbVie moving forward with about a $380 million plant. That's real demand for industrial real estate and specialty contractors.
Got it. So policies and Capex are reshaping who wins.
Exactly.
Quick reactions.
Yeah, that tracks.
Right.
Now, let's hit the most significant individual moves and why they mattered.
Please.
Stripe PayPal chatter lifted the payments group. Again, PayPal up about 7%. Because payment consolidation is a live strategic theme. CoreWeave's financing bid highlighted appetite for AI infrastructure lending. Communications and media rallied on content hits. That 14.2 million view figure changed the conversation from subscriber fatigue to monetization. Materials discoveries reminded people critical mineral supply is tight. And AbbVie's $380 million plant expansion showed life science real estate demand is real. On the flip side, the credit warnings from big bank executives and asset managers were the main macro damping factor. If credit spreads move wider from here, that's going to pressure banks, mortgage and asset-backed sectors, and leveraged corporates.
So practical investor takeaways. What should folks be doing with portfolios?
Actionable stuff. First, favor thematic winners with clear cash flows. Select content owners, platform services that can monetize licensing. Second, position for AI infrastructure, but hedge execution risk. Go after GPU suppliers, data center REITs, and power plays, but use small position sizes on speculative names. Third, protect credit-sensitive allocations. Shorten duration on balance sheet-sensitive financials and real estate, and consider protective hedges for high-beta banks.
Keep going.
Fourth, use a barbell in energy. Hold renewables and storage exposure alongside tactical oil positions. Fifth, be disciplined on crypto. Size positions small and favor custody-grade providers. Sixth, watch regulatory calendars. State cannabis votes, solar tariffs, and Ofcom actions can flip sentiment quickly. Finally, for real estate, favor industrial and life science niches where demand is structural.
Those are clear. What catalysts and red flags should listeners monitor over the next 1 to 3 months?
Catalysts, Fed and Treasury commentary on credit. State cannabis votes. Remember, Pennsylvania's budget included an estimate of about $729.4 million for first-year adult use revenue. Any major M&A or financing news in payments or AI infrastructure, and renewables build milestones. Red flags. A broad widening of credit spreads after Diamond's comment, a big regulatory clampdown on platform monetization, or a significant crypto security breach that curbs on-chain activity.
Short reaction? Stay nimble.
Yep.
Before we wrap, give listeners 3 crisp closing takeaways.
1. Today's moves were driven by idiosyncratic, sector-specific catalysts. You want to be a stock picker, not just a market timer. 2. Hedge for credit and regulatory risk. Those forces can wipe out gains in otherwise strong themes. 3. High-conviction themes remain: AI infrastructure, critical minerals, renewables buildouts, and content monetization. But own names that can turn headlines into cash flow.
Great. Final quick thought?
I'd just add, be prepared for volatility around confirmed policy outcomes and financing closures. The market isn't waiting for a single macro tailwind. It wants confirmation that deals and projects will actually deliver cash.
Thanks. That's a useful, grounded way to think about it.
Yeah, absolutely.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. We'll see you next market day.